Hi friends, this is John Kingston from JR Trading Zone. Welcome to this new video, and in this video I am going to discuss about the stop loss hunting. Everyone know what is a stop loss. When we enter into a trade, when a trader enters into a trade, definitely he will be keeping a stop loss. Mostly traders keep stop loss below a support or above a resistance line. If he is going long in the market, he will keep the stop loss below the support line. If he is shorting the particular instrument, he will be keeping the stop loss just above the resistance. That is for a protection. Okay, protection for our stop loss. This is the usual process of keeping stop loss. But in most of the cases, we keep stop loss at this point and we fix a target here. What happens many times? The stop loss gets hit and the instrument goes on the direction which we had already in our mind. We know that it is going up, so we bought here, kept the stop loss here, but the stop loss hits and it is going in the same direction. In another scenario, there is a particular resistance line. Okay, resistance, when the candles reaches the resistance line, we are watching for a price action. Most of the times it may turn from the resistance and it will move down. There is a possibility, and we are going to short the instrument. We are placing the stop loss just above the resistance line. Now in this scenario, candles are coming and making a bullish sign, bearish sign, and we are happy. Just immediately candle reverses, hits our stop loss, and then it goes in our direction. That is the worst case actually in case of a trader. The psychology will be actually we will feel frustrated. Actually our direction is okay, but the stop loss which we are keeping gets hit, and then it moves, the candle moves in the same direction which we already had in our mind. This is called stop loss hunting. Sometimes we may feel how exactly our stop loss gets hit and it is reversed. Why the candle should hit our stop loss and reverse back? Most of the times it happens to a lot of traders. This is the problem actually. We need the solution. In my video I always say, when we talk about the problem, it is useless. When it is having a solution, it is useful and meaningful. So how can we overcome this situation? Each and every video I will always say, we need a strategy which has more than 50% or at least 50% win rate, no doubt about it. You should know about the chart patterns, strategy, everything. Some people may be buyers, some people may be option sellers, some people may trade in futures, anything. Some may be trading in stocks. Anything, whatever you do, you will have a strategy, and the strategy should be back tested, and it should be having a win rate of at least 50%. That is the first case, and it is very important. Without that we can't trade. But what the fact is, when we are prepared to a trade, we plan a trade. Last video I told you, mostly traders plan the trade, but the execution will be very difficult. They will be not able to execute it properly because emotions are playing. When we are playing with the money, our emotions get disturbed. Fear, greed, hope, these emotions will be repeatedly coming in our mind when we are in the live trading market. Anybody can advise, coming in front of the camera, and they can be giving advice. It is not easy for you to keep all these emotions out of this trade. That can be got only by practice. When the stop loss gets hit and when the trade goes in your direction, definitely the psychology actually of a human being, what we say, will be, we get frustrated actually. Did I keep a stop loss, small stop loss? Should have maintained a bigger stop loss. Why my stop loss is hitting correctly and then it is reversing? Who is behind this? What is the problem I am facing? Why this stop loss gets hit very often? Then next time, how can I keep the stop loss? These are all the feelings and these are all the things which goes through your mind after the stop loss gets hit. Getting stop loss hit is not a problem, but stop loss getting hit and the trade going in the same direction is a great problem. That actually emotionally disturbs us actually. Therefore, what we can do? Simple, what we can do actually is by practice, and we should think who is coming and taking our stop loss. Definitely the institutions. Why? Do they know where we have kept our stop loss? Why should they remove our stop loss, or why should they hit our stop loss? This is the question, main question. Okay, why institutions should throw the retailers out of the market? Actually, the fact is the institutions don't want to remove the retailers from the market, but they want to trade and they want to get the proper instrument. They want to get the instrument, particular instrument or stock in a cheap rate. For that, what can they do? Or why the stop loss gets hit and what is the benefit for the institutions? First of all, I will say you one thing. When the stock, for example, ABC, a stock, okay, it is reaching 500. Each and every time when it is coming 500, there is a very strong support there. When it reaches the support zone, all the retailers, the retailers are ready to jump into the trade. We are ready to jump into the trade. Sometimes we will be trading in 1 lot, 10 lot, or some big traders 50 lot, 100 lot, like that. But the institutions should trade with 1,000, lakhs and more of lots. What is the difference between placing 1 lot, 10 lot and thousands of lots? If you are going into a trade or buying an instrument at a particular level, it is coming to 500 and you are ready to buy it. You are placing 1 lot order, it will be placed at 500. You can get the instrument with 500 rupees. If you are placing 100 lots, that is also possible. Here and there you have some slippages. When thousands of lot is placed at the same time, the slippage will be very heavy. If they are placing at 500, sometimes they will not be, the orders will not be triggered at 500. Some 500, some 510, 520, 550, like that. The price will be the price will show very big difference, and the institutions will not be able to purchase the particular instrument at the, what we say, predetermined price. They know this is the fair value, 500 is the fair value, and we have to get the instrument at 500. But they are not getting the instrument, and they will not be able to get the instrument at this particular level. For this, what they are doing, you have to see. Okay, first, these institutions know that this is the area of liquidity. That is, this is the support line. Here you are ready to buy the stock at this level. Beyond this level, the retailers are keeping stop loss. The stop loss means these are all sell orders. Here you are placing the buy order. Below this line, you are keeping the sell orders. Lot of sell orders are placed as stop loss orders. If the institutions want to get this particular stock at a cheap price, they should get rid of these guys who are waiting with buy orders. Everyone is ready to buy at 500. They will be placing the stop loss at 480, 470, 490, like this, in this area. This area is called a liquidity area, the place where huge stop losses are kept. Stop loss means the opposite order of buy order, that is sell order. If the trade is not working, your positions will be squared off when the candles are moving down and you are out of the trade. Now the institutions will sell heavily for a certain time up to the candles trigger all your stop loss. When all the stop loss gets hit, the candles will be moving down forcefully. Now two type of traders will enter into this trade. The breakout traders, when the support is broken, breakout traders enter. They enter with ambitionary, they enter into the trade, and some of the traders wait for retest. When the candle is retesting the support, again here retest entry people will enter and they will also short the market. Where will they keep the stop loss? They will keep the stop loss just above this line. When the support is broken, according to technical analysis, this becomes the resistance. When the support is broken, then this becomes the resistance. This is the basic theory in what we say technical analysis. Now these two traders, breakout traders and retest traders, will be placing the stop loss above the line. Above the line means what? They are selling here and keeping the opposite order buy order at this place. We have to think in terms of institutions, what the institutions are doing, how they are playing here. That is the important case which we have to understand. Institutions hunt stop loss to create liquidity, to avoid slippages for when they are buying the stock. This is the technique. Actually, institutions work with a system. They also want to buy. You want to buy a stock. The institutions also want to buy a stock. They are also investors. But how do they invest? They invest at cheaper rate, or they push the market or push the stock down, create a lower value, and they then jump into the trade. They know this is the fair value 500. When they enter into the 500 price with thousands of quantity, they will not be able to get it for 500. That is proper. They are ready to invest 500 rupees, no problem. They also know, the institutions also know this is the fair value, good, the nice stock is reaching the support. But when they are entering with thousands of quantity, they will not be able to get it for 500. Already there are a lot of buyers. They are also buyers. There will be no sellers. So automatically the stock will be pumping on the upside. They will have a lot of slippages. To avoid slippages, actually they are hitting the stop loss. But will this happen every time? No. Most of the traders, when they are facing this problem, the stop loss gets hunted. Next time what can we do? Next time when we place the stop loss, you should be more careful and alert, and you must watch the price action at that area. That's why I'm saying immediately when the stock comes and touches the support, it can return. You may not be able to enter a trade. That is not a problem. Making a great loss is better than not entering a trade, not getting a chance. No problem, leave it. Again, we are able to get a lot of chance again and again. When this is penetrating, when this support is penetrating, you have to watch for a while. Is this candle reversing? What type of price action is made there at that particular? It is broken, the support is broken. Then what type of price action is made there? How the candles are reacting, how the candles are formed. Is it reversing or is it taking a retest and going back? Each and every time when the candle reaches the support zone or the area where you are ready to enter, you should wait for a while. If you are ready to take a stock or buy a stock when it is breaking a resistance, when it breaks, immediately don't go and enter the trade. Wait for a moment. See whether the breakout is real or false. What price action is made there. Okay, after that you should decide where to go. You should buy or sell, you should go long or short. Everything you have to decide after a proper price action. After a proper price action, you should enter and keep a proper stop loss. Hi friends. Welcome to this whiteboard presentation. You may be familiar with this chart pattern. This chart pattern, those who get a lot of stop loss hits may be really familiar with this chart pattern. This line, black line, is the very important support zone. Okay, you are ready to enter into the trade when this stock price reaches this line. Where will you take entry? Stock is reaching to this line, and when it shows a bullish sign, you will enter in this candle. Where will you keep the stop loss? You will keep the stop loss here, just behind. You will place the stop loss. Okay, if the stock is 500 rupees, you will be placing stop loss at 480 or 490, like this. This is the retailer's stop loss. The institutions also want to enter here, but if they are entering with thousands of quantity, they will not be able to buy the stock in that price. There will be lot of slippages. Why? The reason behind this, we all should think with the logic. Why they don't get in reasonable price? They get lot of slippages because here all are buyers. Everyone are waiting for this level to come, and everyone will be entering this trade. They will go long in this stock. They will buy the stock at this level. So there are only buyers in this level. If there are only buyers, if you place order 1 lot, 10 lot or 100 lot, you may get without slippage. But institutions place orders in thousands of lots. They can't get it without slippage. So what they do, they sell few quantities aggressively, so the stock moves down. It moves down with a huge candle, hits all your stop loss. What is your stop loss? The sell orders. Here you are placing the buy order, here down you are placing the sell order. All your sell order gets triggered and you are out of the trade. All the buyers now are out of the trade. Okay, now at this level, when the huge red candle is penetrating the support line, one guy will immediately enter. Who is that? The breakout trader. When the support is broken, this line is considered then as a resistance in technical analysis. Remember, any strategy in stock market will not work 100%. Here, this line will then be considered as a resistance. Considering this as a resistance, the breakout trader will enter here. Okay, how will the breakout trader enter? If you have seen my video for entry techniques, you know how the breakout trader will enter here. He will enter with ambush entry. He will jump into the trade immediately when the support gets broken. Okay, then there is another guy, the retest trader. He will be waiting for the retest. He wants a discount from this level. He is expecting to move here, and when this red candle is created, he consider this as a retest and he will enter here. These two guys, the breakout trader and the retest trader, will keep the stop loss above this line. This line is now the resistance line, because when the support is broken, this becomes a resistance. Now the stop loss becomes on the opposite side. These are all buy orders. Here all are sellers. First, in this area all were buyers. When all were buyers, institutions can't get this stock in a fair value. So they want to push the price on the downside. So what they did, they sold some quantity aggressively. When all the stop loss gets hit simultaneously, it creates a huge red candle and all the buyers in this area are out of the trade. Now breakout traders are sellers, retest traders are also sellers. Now you are having lot of sellers here. Okay, Where they keep stop loss? They keep stop loss above the line. Okay, that are all buy orders. Now at this level, in the stop loss level, when this line is going to be crossed, here at this level, who enters? The institutions. They place huge orders at this zone, in this discount zone, where our stop loss gets hit. There they place orders. Actually, they place buy orders at the stop loss level. They know that this stock is not going to move down further because this candle was created by them. Actually, they place huge orders at this place and create this candle so that all the buyers are out of the trade. Now here all our sellers, they are getting a huge red candle downwards because all the stop loss gets hit at one moment. So a huge red candle falls. Where we place stop loss, they enter at the place. Institutions entry is here. Okay, we retailers try to enter here. Institutions push the price down, hit all the stop loss. Because all the stop loss are sell orders, it creates a huge red candle and the price is moving suddenly on the downside. It creates a great fall. When it falls at this area, institutions enter. Institutions is starting to buy, and they buy gradually and they complete their buy within this area. That is, they are able to buy the stock in a fair value. What they are expecting within 500, at this range itself they are completing their whole purchase. All their orders will be executed and will be filled within this area, and they are buying the stock in a fair value. Certainly the stock will be moving on the upside. This is how institutions plan a trade. So we should be able to think in the concept of institutions. What is happening in this area? This is what we have to watch carefully. It only comes by practice. It does not come within 1 or 2 days or 1 or 2 weeks or 1 or 2 months. You have to watch carefully each and every chart, which instrument you are following, that you have to watch carefully. Definitely you can see this pattern. This is an example for the stock moving on the downside, and this line is considered as a support. This also happens vice versa. The candle can move on the upside. Here there can be a resistance. Okay, the same situation can also happen on the upside. So be aware of this kind of pattern in the chart, and this is very important pattern. I don't try to name the pattern morning star, evening star, doji. I want to make you understand the logic behind that. What is happening in the trading, what is happening in the stock market, how institutions are buying, how your stop loss is getting 100. This is what I want to tell you. Yeah. Then you can ask me, will it happen all the time? No. Most of the time it will happen. There is a probability. If this is a fair value, if the institutions are willing to buy at this value, definitely they will be buying in this method. You can succeed in the market only if you are trading like the institutions. You can be a trader in futures, option stocks, buyer, option seller, anything. That is not a matter. But how you are trading, how you are entering, how you are exiting, what the view you are taking on the market, you should all see with the eyes of the institution, big players. Okay, this is what I want to tell in this video. If you are not understanding this video properly, or if you have any doubts in this video, you should watch it repeatedly. That's what I will say. You have to watch it repeatedly. Try to understand this pattern. I don't name this pattern. I want to memorize the logic behind the trade. I will once again say, nothing happens all the time in the stock market. There are only probabilities. So the price action in this area, if it is coming to the support zone in this area, should be watched very, very carefully. What is happening there? Is it a real breakout? Is it a false breakout? Is it a retest actually? Are the institutions entering here? Whether they have entered here or not, we should try to understand. If it is a real breakout, definitely this red candle and the next candle will be red candle and it will try to go on the downside if it is a real breakout. Okay, if it is a false breakout, immediately it will reverse because the institutions have entered here with thousands of quantity. They have entered at the right location. This is how institutions trade in the stock market. Hi friends, I think you enjoyed watching this video. In this video, we have learned how the stop loss hunting is working in the market and how we should overcome and how we should try to overcome the situation. I think you enjoyed watching this video. Learn more, earn more. This is John Kingston signing off from JR Trading Zone. Bye.